Hi everyone, I'm Teddy with Materio. Today I'm going to walk you through how to take prepayments from customers, hold those prepayments as liability while the project is in progress, then recognize revenue and sales tax at a later date once you consider some particular slice of work within the project to be fully complete. I'm going to show you how to do this in Materio, and I'm also going to show you exactly how these financial documents sync from Materio into QuickBooks, keeping that clear distinction between liability versus revenue recognition. Before we dive in, this video is not official accounting or tax advice. Rather, here I'm just explaining how Materio works and how Materio's QuickBooks sync works. It's paramount that you as a business sit down with a CPA, fractional CFO, or some other accounting or tax professional who understands your industry and your particular business in depth. Have that person watch this video as well, then have them advise you on the right process for your business. It may be what I show in this video, or it may be some variation or some other process entirely. Different businesses operate in different ways, so make sure to get that professional advice tailored to your situation to set your particular business up for success. So with that said, let's dive in. So your first step here is to make sure that your QuickBooks chart of account mapping is set up correctly to take client prepayments. We're going to come to the left-hand nav, open that, come down to QuickBooks. Make sure that this Sync Invoices setting is toggled on. Come down to the Manage Settings button. This also might be called Account Mapping or Chart of Accounts. Click to open that. And what we're going to focus on for our purposes here is the retainers and deposits mapping. You're going to open up this drop-down, which is pulling from your QuickBooks Chart of Accounts, and I'm going to map retainers to a liability account that I've created on QuickBooks called Client Prepayments Retainers. Yours can be named something else, but it's going to have to be an other current liability in QuickBooks. And then I'm going to go ahead and map deposits to an analogous account, also an other current liability in QuickBooks. Then I'm just going to hit Update Accounts, and that is going to save that mapping. That's going to make sure that when I do collect retainers or deposits in Materio, that when it gets synced over to QuickBooks, Materio is going to know what account to map that to QuickBooks side. And when that spinner stops, that has been saved. So now we're ready to collect some prepayments on a specific project. We'll come to our left-hand nav here, come to the dashboard, and enter into a project. In this project, I've already set up a scope of work here. So we're ready to collect a prepayment on this scope of work from our client. We'll come to Finances. Over here, we'll open this New button. It's going to say Draft a New, and then it's going to give us a choice of 4 different types of documents. Now, at a glance, retainers and deposits, these types of documents are going to collect a prepayment and hold that prepayment as liability. On the other hand, invoices and credits, those types of documents are going to recognize revenue and trigger sales tax reporting. So for our purposes, our intention is to hold prepayments as liability, so we're going to be focusing on retainers and deposits for collecting our prepayments. If you were a firm that collects a prepayment but you recognize that as revenue right away, you would skip over these 2 types and you would jump straight to invoicing. Even though you might think of that as a prepayment, if you're recognizing revenue, you're using an invoice. All right, let's just cover very quickly the difference between retainers and deposits. Both of these are vehicles for holding a prepayment as a liability. However, a retainer, you're going to hold that prepayment just as a single lump sum of money that you can later spend towards anything in your project scope. On the other hand, for a deposit, although it's the same accounting treatment in that it's a prepayment that's held as a liability, Materio is actually in a deposit going to allocate those dollars to specific items within your project scope so that you can actually tell for this particular piece of project scope, you have allocated a prepayment towards it. To other parts, you haven't allocated prepayments towards it yet. So that's the difference between a retainer and a deposit. Which one you use is just going to depend on the granularity at which you want to be tracking those prepaid dollars. Whether you want to be holding it in a retainer as a lump sum, or whether you want to very granularly allocate those funds item by item, you'd use a deposit. I'll show both, and we'll start with a retainer. Opening up a new retainer, let's pick the client, and then I'm just going to add that lump sum retainer amount. Let's say $10,000 we're collecting as our retainer here. Just for the purposes of this example, to make things clear, I'm going to backdate this to the previous month. That's just going to make everything clearer transaction-wise in QuickBooks. Send that off to the client. And let's say the client paid this also last month. Just waiting for the QuickBooks sync to complete. As soon as it does, we will take a look. Click there to open in QuickBooks. And what we have here is a QuickBooks invoice. The product service on this invoice is a Materio retainer for the amount that we asked for. Of course, it's non-taxable. Let's go into this product service and just check it out to make sure that that is going to be hitting a liability account. Opening up that product service in QuickBooks, we see that although in QuickBooks it says income account, don't be fooled if we open up that drop-down, client prepayments, retainers, that is an other current liability, and that's the exact account that we mapped in Materio for Materio to use for retainers. So that is all good. That is hitting a liability account. And just a few other ways of looking at this to make sure that that is actually increasing liability and is not being recognized as revenue. A few other options here. You can look at your chart of accounts. Let's search for that account. Let's view the register. We saw that this retainer that we collected in Materio that synced over, that has increased our liability of this account by $10,000. We have a $10,000 liability balance for this customer. Another way of looking at this is looking at the balance sheet. So if we were to look at a balance sheet report in QuickBooks in November, because remember we backdated our retainer, coming down to other current liabilities, we have a $10,000 liability balance in that account that we mapped to Materio, and we have absolutely zero revenue in November. So now let's say that a month has passed and we have provided those design services to our customer. Now it's December, we're ready to recognize revenue. Coming back into Materio, opening up this menu, we are ready to recognize revenue. Therefore, the document type we need to choose now is invoice, because invoice and credit, those are the vehicles that we can use to recognize revenue. Opening up an invoice, let's pull these design services onto our invoice. You could be doing this way. You could also be billing hourly. It's all boils down to the same thing for the purpose of revenue recognition. I'm just going to pull these project scope items onto my invoice. You can see that these items are taxable, and let us apply that retainer now to this invoice. So the client owes us $16,500, but we're holding $10,000 in retainers from that client. So let's apply that here. Now the client owes us a balance of $6,500. We'll send that off to the client. They'll give us a check or pay through Materio Pay. Whichever way, we can just record that payment on the invoice. We'll wait for that to sync, and then we will check out what that's done in QuickBooks. So remember, the retainer happened in November. The final invoice happened in January. Let's open up that final invoice. Up top on the final invoice, you have your actual revenue. These are the services that you provided. Those were taxable. Down at the bottom, we are pulling from that retainer liability account, spending that $10,000 towards the balance of this invoice. So this line here is a payment from that retainer to this invoice. And then there was that $6,500 that remained as a balance. this payment was the cash payment that the client made for those $6,500. So what should have happened on this invoice is that we recognized some revenue and we recognized some sales tax liability, and then we pulled from our retainer liability to cover some of those things on this invoice. Let's just take a look at the retainer register, because that should now be back down to 0 now that we've spent that retainer. And indeed we see, so 001, that was our retainer, that increased our liability to $10,000. 002, that was the invoice that we spent the retainer on, that decreased our liability back down to 0, and now we don't have any retainer balance for this customer anymore. Similarly, if we were to look at the report on our balance sheet, in December, we went from a $10,000 liability balance back down to 0, and in return, we recognized actual revenue, and we recorded some sales tax that is now owed to the state as well. So in November, we collected a retainer, and that was held as a liability. In December, we used that retainer towards our revenue and towards the new sales tax liability. So we recognized revenue in December. So now let's run through a very similar example, but let's use deposits instead of retainers. So just a refresher, by using a deposit, we're actually going to allocate those prepaid liability dollars to specific items within the scope of work, rather than holding them as a single lump sum. Just for clarity, again, let's backdate this deposit to the previous month to simulate that prepayment. Add deposit items. We'll pull this specific scope onto our deposit that's going to allocate those liability dollars to these specific items. Hitting next, you have the option of whether you want to collect that kind of forecasted future sales tax in advance by leaving this checked, or whether you want to completely leave off the tax. In that case, you should probably advise your client, hey, when I issue you the final invoice for this later, expect me to collect sales tax at that time. But if you want to keep this toggled on, Materio just treats it as forecasted future sales tax, not an actual sales tax liability right away. Materio is going to hold all of this as just a regular prepayment liability. So it's up to you and your tax professional, what you want to do here in terms of keeping this toggled on or off. Add to deposit. Send that deposit off to the client, and let's say they paid that also last month. Waiting just a moment for that to sink into QuickBooks, and then we'll take a look. So in QuickBooks, this is very similar to how a retainer was. It's just a slightly different product service. So instead of saying retainers Materio, the product service is going to say deposits Materio. All of these items and even the forecasted future sales tax is just going to be deposits Materio. Closing that out, let's just take a look at that product service. And very similar to how the retainers Materio product service was, this is also mapped to a liability account, the same one that we chose in Materio when we were doing our account mapping. Opening this up, you can see this is a liability account. So that deposit in QuickBooks is increasing our liability just as we intended. So let's say a month passes and now we've installed that tile in the client's home. We're considering that slice of the project scope to be complete. Now it's time to recognize revenue. So coming in here, we will now, because we are recognizing revenue, now is the time to use the invoice document type. Let's open that up, add invoice items, pick project scope. You can see here Materio already knows that you've allocated those specific deposit dollars towards these scope items. So all you have to do is select those, hit next, and you can see this kind of dark green is going to be saying we're invoicing for this now, but this is actually fully covered by deposits already. So adding those to an invoice, Materio will pull the deposit automatically onto the invoice as payment. So if you see here, Materio already knows that you had deposits for those specific items, so it's going to auto apply those deposits to the invoice. You can look here to see exactly what was applied for which item. But the long and short of it is this invoice is fully paid, so you barely even need to send it to your client. You could simply publish without sending. Now, if you had a balance due, of course, you would need to send that to your client, explaining to them where the balance came from. Maybe you collected only a partial deposit, or maybe some prices changed during the course of the project. As this stands, we will just publish this without sending and call it a day. Then, as soon as that syncs, we'll take a look in QuickBooks just to see how that worked. So taking a look at this invoice, we can see all of our actual revenue and all of the taxable status of that is recorded in QuickBooks. And then down here, we have a negative line item pulling from that deposits Materio product service as payment for this invoice. So ultimately what this invoice is doing is it's recognizing revenue and sales tax liability for all of our project scope, and it's pulling from our prepayment to pay for that. And if we were to just take a look at, for instance, the customer balance sheet, we can see that in November, we had $357 of prepayment liability, and we had no revenue recognized and no sales tax liability recognized. That's because in November, we issued that deposit. Then in December, that's when we issued the final invoice. So that turned into $324.96 of revenue recognized, along with this amount of sales tax liability recognized, and that we pulled all of this money from our liability account to pay for that. So our liability account is now back down to zero in December. So there you have it. This has been an overview of collecting prepayments in Materio and how to hold those as a liability until project completion. If you have questions about this or anything else, feel free to reach out to hello@materio.co anytime. We're here to help, and we're always happy to hear from you. And with that, have a great one.